And I'm on. Hey, what's up, everyone? I've been on here, but to make it official sounding, good evening. This is DayTraderRockStar, and this is a market radar for Wednesday, October 12th. But it also is a bigger. It's actually a bigger thing than a market radar. It's actually going out to the end of the month. End of the month, this month, going before the election. Comments on everything. We're going to talk about everything right now. First of all, I love, today, I love going back and showing you the how the market's setting up. But I also like to go back every day on my own and kind of look back at the patterns, see what played out, why it played out. And this was pretty good selling today. There was pretty steep selling. Personally, I think it has to do with the election. There's news out there on oil now. It's moving the market. There's interest rate talk moving the markets. There's a lot of things, but I honestly believe that the overall market pullback here is more of the, just not sure how this election is going to play out and what is actually best for the market. So it's kind of an uncertainty that the market's dealing with, and we discuss this all the time, that's the reason markets pull back usually. It's because of it's moving into an area of not knowing what's going on, other than it's not even you're not even sure if it's priced in yet. But we'll talk about that. Anyway, that's what I'm looking at right now as the main catalyst for the kind of the drift we've been seeing here. And we're going to look at that bigger chart. Let me see if I can extend this chart out a little down here and over here, and then this should go down here too. All right, there we go. This is the S&P hourly. That's the big thing going into tomorrow. This is a very key time frame for us because it gives us, a nice swing trades, multiple day trades. Usually you get the momentum. You don't have to worry about scalping it so quickly. Because the other time frame, a little bit less than that, is going to be that 5 minute we're worried about. I don't pay attention to the 30 or the 15. You can. But that's not my specialty. I like working that 5 minute. I like working the 60 minute. The combination works great on trying to get a 60-minute rotation and timing it with the 5 minute. That works great. But then you have these old trend lines. And when we have an old established channel or a trend, any way you look at it, it tends to come into play again. It might have been something nice here and it actually showed you support there and almost a gap down to it and it almost got back. So it continues to play out. Even down here, we got down to it. And this was our X marks the spot because there's an underlying trend line on the daily that goes back, but I'm showing you the 60 here that comes under there. So our goal on this move actually was 2130. So we were, mentioned that in the room. I mentioned that a few days ago, based on X marks the spot. And that sounds kind of corny, but it's just a technique where you have two intersecting trend lines, and it's usually kind of a sign of double support. So I like a retracement trend line plus the rising trend line. And you kind of circle that area, you make sure that everything else is lined up properly. You want to have the momentum here on the daily, on the hourly, always better to have it on your side. In this case, we don't have the daily, but the hourly is. And, I think you could understand that we probably could get a bounce here on the hourly, but definitely not anything big, but a short-term trade, probably tomorrow. And that, I think, has a good shot of actually rolling over. I really do think that this market is going to be affected going forward before the election. Still, I don't know how many days away. But as it gets closer, I think this market here kind of sells off into that. And this is a kind of a bearish pattern also, this rising wedge pattern. Something about the, everything actually working up pretty good. Right now there's a little trend line, and if we looked at that 60-minute time frame, it was right here that it started to sell off. I mean, it wasn't unknown of this. That's the big question. This was working so good. But when the big time frame finally breaks down, this is going to flatline. There's going to be so much pressure and so much, there's going to be selling to really, this is not going to, this is going to stay flat here. That daily here is going to continue to make its rotation down, and that's the big picture. Now targets, you could look at, I like always look at a measured move out of a rising wedge pattern. I take the top trend line, I'll clone that, make a parallel trend line, and bring it down to the beginning of the wedge pattern. And that would be your measured move area, wherever that price came in. So maybe that 2050 area. That's your first, that would be something, one of my first targets. But again, there's probably other things you could look at before that on the 60-minute time frame. I paid more attention to the momentum right now and being on the right side of the trade, because the bigger picture I think is down, but you can still get the upside swings. And just like here, up, down, up, down, up, down. But it really does feel like we're in almost in that waterfall pattern where we're going to kind of just roll over and spill. And it's just because of the election and the process and the political situation. You know, we're not going to go into that. People turn off the video, but you know what's going on. So, interest rates. You know, the other blame for the market as we get closer. I think the interest rate hike is now like at 64% going into December. That's the percentage, and of course the market. But that is so transparent in a way that people keep on saying that's not going to happen this year. It's not going to happen, but it doesn't matter. They know what's going to happen. If it's not November, it's December. If it's not December, it's probably January. But it's going to happen sooner than later. It's not going to blow it off unless something really terribly happens with the economy, and maybe. This market pulling back puts them on, puts that on the back burner. People say, "Oh, look at the market's correcting before the election." People get, they're dropping these email bombs, and there's more tapes coming out, and it's like the president election is being played out on the National Enquirer. Basically, it's probably going to be more news on TMZ about the campaign. That's what it feels like. It's like, what's the next shoe to drop? Who's going to have the next? Are there going to be women coming out now against Donald Trump? Is there going to be someone? What do you call it? Something left, a smoking gun on the Hillary with the emails or something? I just listened in today, and they're saying that Hillary got the questions earlier in the Bernie Sanders debates. That WikiLeaks somehow, and I thought that was big news. I don't know if people are going to pick up on it or something, but anyway, that's the political situation, and I think that's where the market is kind of stuck at right now. We're stuck in this. Tomorrow's going to be a holiday also. Not much going to be happening, but we are going to look for that upside on that 5-minute time frame. Well, excuse me, on the 60-minute time frame. We're looking at the 5-minute right now, and again, that doesn't. It looks like a bounce. Overbought, but we'll see what happens overnight, what kind of news comes out. But right now, medium term, bearish. Short term, slightly bullish with the 60-minute time frame, but not for a long time. I still think that's going to roll over. I need a reason. You need to give me a reason why the market would make new highs. We're very close to it. But give me a catalyst. Give me something that's not worrisome out there, that the market's going to say, all right, I feel it just doesn't feel right. I mean, I'm pretty optimistic, when it comes to the markets and bullish, but when I feel the uncertainty here, I think we can't continue to look through the market in rose-colored glasses. Just on a side note here, we did there was a couple good setups today. I wanted to show you because I actually wanted to videotape it and kind of mark it off because it was a great example. We had two great days that we had an example of a technique called a triple stochastic flag. In this case, it was a triple stochastic bear flag setup. You can have a triple stochastic bullish flag, and it's a continuation pattern. Flags are continuation patterns. So what the object here is, you have the bigger trend. The bigger trend is down. Every bounce here, that little flag is a kind of just a little bounce, and then it breaks down and continues on. And then you had another one here. And then it continued down. So the way I came up with this, I could remember it, it was a long time ago. 2000. 2003 maybe. I was working stochastics and working different combinations because I've always traded divergences, but I wanted to see. I just, I would do I was always doing research, and I was back testing and I found out that certain stochastics on the 1 minute, would, the calculations would show up on the 5 minute and 60 minute also. Depending on how far back you went, you could time things, so it almost gives you that same look at different time frames. But, I found some things that work great together between the 14.4, 14.3, the 40 and the 60, especially the 60. And, I tweaked it a little. One of the techniques that came out of that is watching the longer term trend, which is basically that third stochastic band, the slower one, the 60 period look back, and that gives you a kind of a longer idea of how the trend is. And if it's low down here, it's very bearish and moving down, and because you're not getting that rotation back up. But as that time is going through, the faster, we call this the medium one, the faster one does have that little rotation. Even though this one's flat, this one could rotate back up, but the fast one is really the key here. So one of the techniques that I always say is if the medium and the slow are under 20 embedded means they've been flatlining under that level, the 20 level, for more than 3 periods of the candle, so it would be 3 minutes. If it was flatlining there, that was kind of a sign of weakness. If you can identify so far a trend, and if it starts to look, and it's important, you can identify a flag, and I said, if it looks like one and everything sets up, it's probably a flag. They have a certain look to them, so you might as well look for them. You got to make sure they look like a flag too. And that because it looked like a flag, and the way this sets up it tells you the timing of when to get into that. You want to actually buy as we rotate up, or actually in this case short as we rotate up above 80. You got to you're always going to get the best price if you short into strength and you buy into weakness, if you know what you're doing instead of chasing it a little. But anyway, that's what you would do. That's the technique right there. You're seeing the strength is going to continue because it's embedded down here. This is just a fast rotation. It really outlines that little bounce, and then it rolls over, and it continues to go down. A great technique, very easy to spot. This is a pure one. It worked out great. Yesterday we had another one, and I showed you that one. I don't know if I can even find it. What was it, 11 o'clock? All right. See, there's so many lines sometimes. Anyway, I think I did it on the video. Maybe it was the day before. So that's an important pattern, very important pattern, and a great pattern to do. So I wanted to share that with you instead of doing its own. Actually, I do have its own video I sent out to, on YouTube. So just look for that video. I sent it out that week. And then we have some new HPS setups for this week. Now, those are for members. Members get all the HPS setups, but they're really good ones. And considering today, and I'm going to do an update for you on those, we added 3 new ones. Talking about the buy triggers or the short triggers, the targets, and the stops are all outlined for you on the trade. So you just have to go to the HPS watch list and just click on the chart, and the chart will come up giving you those levels. But there is a couple. I'll just show you. I won't show you the levels we're looking at, but I'll just show you the chart. And let's see where we are here. Some interesting ones here. I need a Coke. We're looking at, let's see which one I want to show you. Because all of them are actually holding up pretty good. They are holding up pretty good. Let me go back here a second. Sorry for the talking to myself on the video. Just want to make sure. Waste management. All right, let me see what they all look like. Let's see what waste management looks like. That does look really good. Yeah, that oversold stochastic level, the retracement to the trend line. There was a lot of pressure today in the market. I mean, it was down. It was down like the market was. Let me just see something fast. SPX. So you see the SPX, how that trend came down in that bounce. I just sometimes want to make sure I'm looking at the overall pattern of the market, and then when I'm looking at those stocks to see if that diverges from that pattern. Like the waste management, the same thing. So it just got pressure with the market. Got caught up in the tide going down. TSCO, but you will find stocks that are bucking that tide or have a little different look to it. This one's a little bit different. It's so you might want to dig a little deeper, and that's actually the 5-minute time frame right there. But yeah. We know that's a big divergence. We like divergences. We have all the other information on that chart there. But a lot of these new ones are holding up into that flush. Even AVB here, when we're looking at these REITs this week. And this is an interesting level too. They haven't popped, and it's dangerous because we're kind of playing Russian roulette here, because you do expect the market. I am expecting the market to break down. Yeah, there is some good levels here that we should, technically bounce, or But if the market does break down, these could all break down too. I mean, that's just a given. Right now, these are some of the better ones that are set up for a bounce. And tomorrow, hopefully, we get that, because right now, at 60 minutes, all set up. We'll see how the 5 is. The daily has been choppy, but it's negative. So that's it. I'll get that out. That video only took about 16 minutes and 32 seconds. And I'm about to close it out. Tomorrow's should be Yom Kippur. So happy Yom Kippur to those who celebrate. Probably going to be very dead. So we'll have to deal with that. And I'll see you in the markets. Day Trader Rockstar signing off for Day Trading Radio. Come on by.